Let's look at eHealth. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the Megatrends and a theme called efficient healthcare. Performance-wise, it is, more than double the S&P 500. But we have seen some corrections. So eHealth, they are in the insurance business, pretty close here to the 52-week low, and they have gone through one of the biggest haircuts. So minus 54%, which is, obviously, pretty sizable. But maybe that creates an opportunity. So we make health insurance affordable and easy. So continue shopping for, so on and so forth. So this is, a very nice and informative website. And here is the chart. So there's a lot going on here in the charts. So let's quickly just look at the time cycles. So the time cycles have been relatively reliable. So there's obviously something going on here, suggesting that we are actually overdue a rising phase. That is, bullish. The thing is that we also see this fractal happening, because there is this repeating patterns. Let's draw it in. So essentially you do see that head and shoulder-ish patterns keep repeating. You get it over here. You certainly get it over here, and you also get it over here. So that is a pattern that has a long history here of playing itself out for this stock. And that can also, become self-reinforcing, because when people look here, they're going to look back here and then start to draw conclusions. When investors are here, they will look back here and see that head and shoulders pattern, they have a history. And here as well. The current head and shoulders pattern is definitively the biggest so far. The interesting thing about the prior head and shoulders is that that is, breaking through the neckline. Because in this instance, we could argue that we sort of had that key break. Well, at least breaking the left shoulder here as well, around here. So we have so far had a bit of a 21-ish% sell-off. If we measure the same thing here we break through the left shoulder. Okay, let's measure it. Yeah, so in that instance, it's a bit tricky to measure, but let's do it like this. Yeah, so we did go north of 30% in that instance. Well, I guess south of 30%. And here as well, you could argue that there was a left shoulder here, and then we broke down, but then we did have a rally. But basically, looking at the prior head and shoulders patterns, we haven't seen that, textbook, measured move where you measure from like the top of the head down to the neckline, and then you draw, the projection of where we expect, bearish exhaustion to come in. Looking here at the weekly RSI and looking at previous times where we had this RSI here, this is the similar place, RSI-wise, huge rally. In this instance, rally. Here we did get more oversold, but we did get a rally. Here we did get a bit of a bounce. Here, formed a key low. Here, formed a low. Here, got a rally. Here we got a bit of a bounce. So basically, this very low RSI has a history of playing itself out favorably for the bulls. Looking here at the daily data points, we have a very low PPO. This PPO tends to be bought by the bulls. We do not have much in terms of support. We have lost horizontal support. We are below all the moving averages. So definitively, this is a bearish situation, but looking here, at the daily RSI, this is a very low level that historically tend to trigger bulls to get into action, contrarians and so on and so forth. So technically speaking, this is speculatively bullish, but obviously this is very, very speculative because we are at a very high level of pessimism. Looking at the seasonality for this stock, over the last 5 years, then August, September have been weak, but October, November are very strong. Over the last 10 years, We do see a weakening into September, but October and November are strong. Looking at old history, then it changes, because then you see that there's a strengthening from August into September, October, and November. Hence, the coming months is not really that favorable for the bears. You see that the period from March to July, that has a clear weakening, which has been, favorable to the bears. You can see here we peak around late part of February, and it has been a very good short. So that seasonality, it has played itself out, that weakening. But there's a strengthening period on the horizon, and it doesn't make a whole lot of sense for the bears to be too aggressive shorting in that context. Looking here at FinViz, let's look at the price targets. So the current stock price here is $43.33. And when you look here at the price targets, 63, 63, 101, 135, 105, 150, and 90, if you look here at the worst of the recent price targets, like $63, that would be a 45% rally from the current stock price, which is bullish. Saks, number 3 hold, C value, given that this is a more techie insurance play, C value isn't that bad. F growth is not good, but then again you have A momentum score. The industry rank is really good, top 10% industry insurance brokerage, $1 billion in market cap, no dividend. So if I were to sum up my take here for this stock, the theme is definitively interesting. When we look here at the stock, the current situation is definitively very, there's a lot of pessimism for sure. This is obviously a very bearish situation, but then again, the recent time cycles suggest that we are overdue a rising phase. The RSI level and the PPO level we have now is extreme pessimism that has formed lows in the past. Even though this stock tends to have these head and shoulders patterns, they usually don't play themselves fully out. You don't get that full measured move to the downside, which also could become rather interesting. The fundamentals are looking interesting as well from a bullish perspective, so taking all the evidence together, it makes more sense to become bullish at this point, or at least look for bullish opportunities for eHealth than bearish, because there's already been a huge bearish move.